Good afternoon. I'm Robert Mays with BlueCreek Investment Partners. Well, each earnings season has its own story. First, you have the fundamentals of the companies, that how much money they make, what their balance sheets look like, those sorts of things. But then the second piece of it is you have expectations. What are analysts looking for? And more importantly, what are investors looking for? Really, as we go back and see what those expectations look like and how those fundamentals have kind of transpired over the last 4 quarters, what you'll notice is a general trend of low expectations and yet improving fundamentals, to the point that now all of a sudden those expectations are starting to get pretty high. For example, if we go back to the first half of 2009, most of the earnings that companies reported was really, for a large extent, was brushed away simply by analysts saying, well, that they cut cost, and that really it wasn't because of increased sales that created this profit, but it was instead just simply a quick response by the companies to lower the cost, and therefore they were able to end up having a result that was better than what the street expected. The problem with that is that as we moved into the third quarter, that it became harder to explain that away, because even though there was still cost cutting going on, companies were starting to show some increase in sales. Now, the executives oftentimes during that quarter weren't quick to offer an optimistic view in terms of what the future offered, and so that ended up being something that again helped keep investors and analysts a little bit tentative about the market and about investing, and so consequently the market still, had some resistance, if you will, going up from there. But here we are in the first quarter, and before we get to that, the fourth quarter of last year, we saw earnings of companies increase by 17%. Now that's without the financial sector. If we included the financial sector, it would actually skew the results, because most finance stocks did not make money or made a minimal amount a year earlier. But now as we go into the first quarter, many analysts are expecting earnings to be up as high as 27% over the same period last year. And that again is without financials, because if you include financials, that number would be somewhere in the range of 37% increase. And so with this increase and the fact that companies are starting to make more money, and they're doing it because of increased sales, and that the demand is coming back, what we're also seeing is that corporations are also starting to guide us in terms of what they expect their future earnings to be over the next 6 or 12 months higher. And as we see that, then expectations now are starting to go up. Our view is that this quarter should be, again, a terrific quarter in terms of earnings. But yet at the same time, we're starting to see that expectation build up. As I mentioned, as the analysts now are expecting this 27% growth, according to the Wall Street Journal, that as we see that, then clearly if there's any, if corporate earnings come in a little bit underneath that, or frankly even match it, then we could actually have a bit of a sell-off in the stock market. So that's a potential risk now, since those expectations have ratcheted up a little bit. Now, don't misunderstand me. That doesn't mean that investors have been flooding to equity markets. That's not the case. Many have still remained either on the sidelines or have worked towards fixed income products, but really not have pushed over yet into the equity market. So if we do see a pullback here because of some disappointments in these earnings, I think it's important to keep your eye focused on what those fundamentals are and what the executives are saying about the future. Because if they're still coming in at a very healthy rate, and that the guidance looks much more optimistic than what it has in the past, then I think any sell-off that we may have in the market, if it happens, it might not, but I certainly would look at that as a buying opportunity. So we're very excited about this particular quarter and getting started to hear how companies did. As a matter of fact, the first company, Alcoa, released their earnings this just a couple of minutes ago, and they had 10 cents per share, which was a penny over what the street had expected. So hopefully we'll see more of that going forward. Well, look, hope you have a great week and look forward to talking to you again next week.